Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking back in on the Canadian MJ sector as we head into the big day April 10th where we get some details, and I do not expect a big catalyst there. You have to think about the market being smart in the sense that it does price in known events. So when you're in a stock and everybody's saying, oh, we're going to get this news release on this date, or we're expecting positive trials then, if the market knows it and is anticipating it, you're not going to see a bullish reaction, certainly not a significant bullish reaction when that news does come out. So pretty much as soon as it was announced that information was coming out on April 10th, that's when it got priced in. The bull push that we saw in the 3 days following that announcement was the market pricing in what we're going to see April 10th. And granted, there could be some details that are a surprise. If there are some bullish surprises in there, that is when the market will react bullishly. But otherwise, the news itself is not going to be a bullish reaction. So it's the same thing that I was posting in my videos 5 months ago, with the election, where the polls tell us whether we're going to see these states pass legalization or not. The polls are not a surprise. They were pretty sure thing. And I've been following these MJ polls for, 7 years at this point, and I've seen no real surprises. When you have a vote that's pretty close in terms of 52% yes, 48% no, and the polls are back and forth, then that can lead to some bullish reaction when it does get a pass. But if you have anything that's, 55 to 60% is sure thing, the market prices that in, and that's why you see a sell the news reaction in November. So we did see a lot of nice bullish movements this week, and again, that is people wanting to get in before April 10th. So you have to figure when April 10th comes around, these people are going to potentially be looking to sell. So on APH, the video last week, we highlighted that APH was now the lead bull in the sector. Technically speaking, it was the strongest. Did I know it was going to have news this week? Absolutely not. But the chart was set up, and we could see the bullish action leading up into this week. So we were looking for follow-through, and look at that follow-through. Pretty much couldn't have been a better week for APH. Blue sky breakout, strong close, $8 psychological resistance, and then we're just looking at nice round numbers because we have no resistance up here. I'm looking at $8, $8.10, $8.20, $8.30, all the way up because we have no price resistance. And just to compare it to WEED, if weed was at the same price right now that APH was, we would be up over $18 just comparatively. So clearly, APH is the lead bull in the sector. We've had gap up opens. Keeping in mind, we have seen now 8 green days in a row. We are due for normal, healthy consolidation, but as long as we keep closing up at the highs of the day, the bull run is going to continue. If you are not in yet and you're looking to enter a position, the risk to reward does not favor entry up at this point because we have run so significantly in such a short amount of time. We have gone pretty much 20% in 9 days. So you don't want to be jumping in up here, and if you do, you're just making day trades. You're just making some short-term entries, scalping a few pennies to the upside, and exiting because there is going to be normal, healthy consolidation in the near term. What's going to signal that consolidation is coming to me is a loss of the upper Bollinger Band support. So you can see each day that we've broken out above this upper Bollinger Band, the low of the day has bounced off of it and then continued to the upside. So this upper Bollinger Band is going to be around 770 to start next week. Update that every day, and once we close below it, we know some further consolidation is coming. After a bull move like this, we could pull back 10% and still be in a very bullish uptrend on the daily time frame. That's why we don't want to be buying here and trying to chase. If you miss this move, then it's a bummer, but you don't want to try and it's called FOMO, fear of missing out, where you chase a trade, you buy the top, and you're buying somebody's shares who got in at the right time, and you're giving them their profit, and then you're stuck holding the bag. So the bull breaks occurred when 685 broke. That was a clear bull signal. And when the 699 range broke, that was a clear bull signal as well. So as soon as $7 broke, that was a bull signal, and that occurred 3 days ago. So if you're trying to get in early next week, you are way late to the party. Weekly time frame shows that bull breakout, increase in volume, perfect, beautiful chart, and sky's the limit. We have blue sky breakout. There is no resistance in sight. These are levels that have never been reached before. So APH is the lead bull in the sector. There is no doubt about that from a technical perspective. In terms of market cap and all that, WEED is still the major player, not in terms of the chart. So WEED, look at the action we've seen here, and I've seen a bunch more strength in ACB and a lot of other individual names that WEED is not seeing. And we did have the news that was dilutive news that more shares were going to be issued, so that was a little bit of a weight on the bullish action. But as of right now, I don't like a bullish entry in WEED unless we can see a break of 1045. We have a double top at 1045 and 1044. So very clearly, the bulls have to break that level to see some upside momentum. We also have a triple low here, 996, 996, 995. If we can hold that level, the bulls maintain a higher low. So what I see right now is continued lower highs ever since the high back in mid-February. And our most recent high, lower high was 1125. So I'm watching our low of 951, our higher low of 995, and still the lower high pattern. So basically, I would not want to make an entry here where we currently stand because we're in the middle of nowhere, no man's land. We're right in the middle of support and resistance, and there's nothing that is telling me that the bulls are going to see follow through to the upside. So I would rather make an entry on a break of 1045 when I know the bulls have some momentum to the upside because they're breaking a key resistance level, and I know because it's that clear of being a double top that there's other traders are watching that as well. So I know that there's going to be a push to the upside when we do break 1045. Next resistance after that is 1064. Not saying it's going to be a breakout by any means if we get over 1045, but we will have bull momentum to the upside. If we break 995, we're looking down at 980, and the bears will still be in full control of the daily time frame. The weekly is showing weakness still. Loss of the middle Bollinger Band on the weekly was red flag number 1 after it has been support for 7 months. Then we back tested and rejected from it, and here we are still rejecting from that level. It's 1056. It's now beginning to level out and descend. These exponential resistances are driving the price to the downside as well, and the bears are currently in control of WEED, and it's up to the bulls to prove to us that they are regaining momentum, and step number 1 is breaking 1045. ACB has had some beautiful follow through to the upside as well. I would be cautious here. Obviously, the strong close at the high of the day, no reason to sell, and looking for continuation to the upside to start next week. But same thing, you don't want to be chasing here. We have seen 6 green days in a row, and we've gone from 253 up to 280. So essentially a 10% plus move to the upside, and we have multiple gaps open. So we're not seeing the gap and sell-off scenario like we've seen in the past. Things are changing in the sense that the bulls are able to keep that momentum. But what these gap ups tell me is that the bulls are exhausting themselves to the upside. Keeping an eye out for a bearish reversal candlestick, just like we had in reaction to the news back at the end of March. We had the gap ups, we had a very clear bearish reversal doji, and that's when the consolidation began to start. So we did close above the upper Bollinger Band today, but the upper Bollinger Band on Monday is going to be in the mid to upper 280s, and that will start as a resistance level most likely. So we'll have to keep an eye on that level. Major resistance, and not meaning major as in strong, but very important, is 284. If we can get over 284, we make a key break of resistance. We see the highest price we have seen in 3 months, and the bulls are maintaining full control. If we see a bearish reversal candlestick, we will look for normal healthy consolidation, and again, we could pull back 5% here very easily and still maintain a strong uptrend. Look at the weekly time frame. The upper Bollinger Band is going to be a factor next week. If we get over 284, there are not many resistance levels left. It's actually 285 and 284. So I would use the higher number there as 285 as the next resistance that the bulls need to get over from the end of November. After 285, I'm looking at $3, 336, and then the all-time high 395. So you can see if ACB were as strong, technically speaking, as APH, we would be up over $4 right now. So still certainly lagging behind, over 35% behind its all-time high, where APH just blew right through it. EMC had an impressive end of the day, and I've been saying that the bulls are not showing us anything, and they did at the end of the day. They ran it up and closed at the high of the day. So we are now seeing bullish momentum. A couple signals for entry would have been a break of the high of Wednesday at 241, or the close over the middle Bollinger Band would have showed some strength, and the close at the high of the day would have made people comfortable holding over the weekend. We also have a key resistance here, though. We still have not broken the lower high pattern on the daily time frame. We had our low at 205, still formed a lower high with this top at 253, a little double top. Then we formed a higher low at 216. Now if we break 253, we have our higher low and our higher high, and that is the beginning of a trend change, the beginning of a trend change. So we have a bullish reversal candlestick on the weekly time frame, and I haven't even looked at the weekly chart yet. I just know by this price action on the daily time frame, that's going to be a bullish reversal candlestick on the weekly. It's a bullish reversal hammer. Look at the nice bull volume after decreasing bear volume, showing that the bears were tiring to the downside. And we're now looking for a green week next week to confirm this bullish reversal candlestick. It's going to take a lot of work for the bulls to turn around this weekly trend. But as of right now, we do have the bulls on the daily time frame close to shifting this momentum and beginning a higher low and higher high pattern. You can see the Bollinger Band is beginning to level out, and that will begin ascending if the bulls do see some continuation. And they want to hold this middle Bollinger Band on any back test and start to affirm that as support, because the bulls need this middle Bollinger Band as support to hold in any uptrend. That is the level that you need to hold, the middle Bollinger Band, because trading between the middle Bollinger Band and the upper Bollinger Band is known as the upper bullish Bollinger Band channel. So you always want to be in that range if looking to be in an uptrend. OGI had a big time recovery, and the pattern here broke, and it's a nice little glimpse as to what the potential future is for EMC, where we had our very clear lower high and lower low, the dump on news. The bounce was just another lower high. We formed the higher low. So support was at 181, the higher low formed at 205, and as soon as we broke the high here of 247, we then had our higher low and higher high, and we shifted the trend. It went from a clear bear trend to now the bulls showing up, and then from there we start forming higher lows and higher highs. So when you see that happen, your mind shift changes. Until that higher low is established, you're just looking for lower highs and lower lows to continue. Once you have the higher low, you look for the lower high pattern to break, and then from there on out, you're looking for higher lows and higher highs to continue. So we're in breakout mode, and the most impressive part of this on OGI is the volume. That is perfect bull volume, and we've actually been seeing it this whole move to the upside. We had off the bottom, a little bit of increasing bull volume, not very impressive. Increasing bull volume on the news reaction. Very impressive increasing bull volume 4 days in a row on this big time breakout. Same scenario. If you're not in this trade yet, you do not want to be buying up here. We are due for normal healthy consolidation. The upper wick here showing profit taking from the high of the day at 317 is potentially indicating that consolidation is coming. If we cannot break 317 on Monday, we will look to lose the upper Bollinger Band support and consolidate in a normal healthy manner. The weekly time frame bouncing off the 50-week moving average support on the dump, bouncing off of it again, and turning that trend around and making a recovery. So this is a significant recovery for those bulls, and on the weekly time frame now, we will be looking to form higher lows and higher highs. We have increasing bull volume. We have the MACD is starting to come up for a potential bull cross, and the resistance levels from here, after the high of this move up at 317, I'm looking at 316, so breaking above that level was a good sign. We're now looking at 353 and then 363 as resistances, but again, daily time frame needs to consolidate in order to see a move back up to those resistance levels, in my opinion. New ETF, HMMJ, so far going pretty perfect for bulls, and we had a strong close at the high of the day at the all-time high yesterday on Thursday. We did see an upper wick of profit taking after day number one, so that was a little bit of unsure action in terms of having confidence going forward, but the close at the high of the day on Thursday at the all-time high certainly favors the bulls when you're in blue sky breakout. When there's no price history and the bulls have momentum and close at the high of the day, you're absolutely looking for further upside into the following day after that. And we had it, and we're doing the same thing here. 1085 was the all-time high, and we closed at 1084. We're looking for continuation on Monday. It's really hard to gauge things without previous price history. No indicators are showing up yet, so we're pretty much just going on really short time frames. If you're looking at the 5-minute chart, you're just looking for higher lows and higher highs to maintain, to be in that uptrend, and profit taking will be swift when it occurs. We could very easily see a 5% drop on profit taking, but as of this point, we are not seeing any indication of profit taking. If we were to see an upper wick like we saw on the first day, if we were to see that on Monday, then that would absolutely indicate that some consolidation is coming. So keeping an eye out on the candlestick shape to tell us the psychology of the trading environment that is going on, and right now it's screaming all bull. So the weekly time frame shows that. Perfect start to the week, perfect start to the creation and the history of HMMJ, the MJ ETF. And if anybody wants some marijuana ETF domains, come at me. We got some MJ ETFs, marijuana ETFs, MJ financials, all that. So, SPRWF, upper Bollinger Band resistance, 132. and we're riding up that 5 days in a row. So it's very clearly that that upper Bollinger Band is keeping the price contained. The bull signal here on SPRWF, same thing that we've been pointing out earlier in this video, 122 resistance, 123, so a little bit of a double top. So we saw a bounce from the bottom. We broke the lower high by a penny. That's not convincing. I want to see a more significant break than that. We pulled back. We established our higher low at 110, and then we broke 123 more convincingly. So it was the higher low and then the higher high that shifted the momentum to favor the bulls. And as long as we consolidate and form a higher low compared to 110, we'll be looking for higher lows and higher highs to continue. The weekly time frame is trying to regain the middle Bollinger Band, and it did regain it this week. After low bear volume last week, increase in bull volume this week, trying to regain the trend because we have been weak here. We have a clear lower high pattern with the last high topping out at 144. So anything less than 144 is going to be just another lower high on this weekly time frame. And we're coming from a lower high and a lower low pattern, so we would then need to see a lower high if we cannot break 144, consolidation, form a higher low compared to 89 cents, and then break 144 to resume the uptrend on the weekly time frame. It's the exact same thing we just saw on 3 different examples on the daily time frame, but it's a more longer term pattern here on the weekly. So the theme of this video is higher lows and higher highs are shifting trends, really, because we have so many examples where the trend clearly shifted from favoring the bears to favoring the bulls by breaking the lower high and lower low pattern. And we're watching EMC to do it early next week as they're coming close, have to break 253 to get that bull momentum to the upside. Pretty solid bull volume the last 3 days, and I was pretty surprised that on Tuesday, or make that Wednesday and Thursday, we did not see more price action to the upside due to the huge bull volume that was behind it. But now we are seeing that volume preceding price a little bit, and we'll see what kind of momentum we can get to the upside. So I appreciate you watching. Feel free to ask any questions, and certainly going to be an exciting week going forward. But again, APH, ACB, some of these names are overbought, and they need to consolidate. OGI among them as well. So don't want to be chasing. If you are in these trades and you're long term, you're very happy. If you're in these trades and you're shorter term, you're walking up your stop loss level, but maybe you're using the upper Bollinger Band to close below that level and you'll exit. Maybe you want to keep a tighter stop, but always keeping that trading game plan intact and following it. Not letting the emotions get to the best of you and saying, oh, we're going to the moon, we just keep going up. Obviously, we're going to consolidate. So I appreciate you watching. Have a great rest of your weekend. We'll see you soon.